Venezuela is known for a great many things. Its beautiful landscapes and heavenly beaches, its wonderful people and colorful culture, as well as the revolutionary effervescence of the past 25 years. But there is another key aspect: oil. For the past 100 years, the oil industry has had an outsized influence in Venezuela. Sometimes under a corporate conception to fund obscene accumulation, and other times with a sovereign model to support social programs. Oil has always been a battlefield. In recent decades, crude exports provided more than 90% of the country's budget. It is no surprise then that the United States, in its never-ending regime change plans, unleashed sanctions against the Venezuelan oil industry. Crude reality: sanctions against the Venezuelan oil industry. 1. Maximum pressure. Unilateral coercive measures, sanctions for short, against the oil sector began in mid-2017 under the Trump administration. The U.S. Treasury Department banned any transactions involving bonds from PDVSA, as well as the issuance of new debt, effectively barring the state oil company from financial markets. In early 2019, Washington ramped up its maximum pressure campaign with an oil embargo, blocking U.S. citizens and companies from dealing with Venezuela's oil industry. At the time, PDVSA exported 500,000 daily barrels of crude to U.S. refineries. Wiping that out meant a loss of $11 billion in yearly revenue, or $30 million per day. Here, there was an apparently obvious solution. Venezuela could just sell crude to non-U.S. customers, right? Easier said than done. U.S. officials immediately threatened potential buyers, such as Indian refiners, against dealing with PDVSA. And in 2020, Washington levied secondary sanctions against Russia's Rosneft, which had been lifting Venezuelan crude and redirecting it to other destinations. Chinese companies also balked at the pressure, instead purchasing Venezuelan grades through intermediaries at significant discounts. There's no doubt that a multipolar world is emerging, but it's not here yet, and that's why economic sanctions bite so hard. 2. Freefall and rebound. With financial sanctions, an oil embargo, secondary sanctions, the blacklisting of shipping companies, a clampdown on swap deals, and plenty of other measures, the U.S. tightened its siege on the Venezuelan oil industry. Crude output plummeted, going down from nearly 2 million barrels a day before the first measures in mid-2017, all the way below 350,000 barrels a day in 2020. It looked like the end was near. Yet against all odds, oil production rebounded. A certain flexibilization to favor private partners, as well as working-class ingenuity and key support from Iran, saw output slowly recover to around 800,000 barrels per day in early 2024. Though Venezuelan officials have repeatedly pledged to surpass 1 million daily barrels, as long as sanctions are in place, it's nearly impossible for PDVSA to get the necessary investment capacity to significantly raise its ceiling. Corporate media journalists like to say that Venezuela's oil sector already had problems before sanctions. Of course it had. But all those issues, lack of maintenance, brain drain, corruption, etc., were only exacerbated by coercive measures. It's like saying the patient already had a headache when he was run over by a truck. 3. Short-lived respite. Once in office, the Biden administration was quick to admit that its predecessor's regime change operation had failed. It's not that regime change was no longer the goal, but there was a need for a new strategy. Still, under pressure from foreign policy extremists and way too high on U.S. exceptionalism, the Biden White House essentially left the Venezuelan sanctions policy intact. The first change came in November 2022, when after extensive lobbying, the U.S. Treasury granted Chevron a license to reactivate its joint ventures with PDVSA in Venezuela. And then in October of 2023, the U.S. Treasury issued General License 44, allowing transactions with the Venezuelan energy sector for 6 months. Sanctions relief at last? Not quite. For starters, U.S. officials were quick to warn everybody that this was not a call for investment, so Venezuela was only able to move forward in minor projects, especially with companies that had debt to recover. The biggest advantage was the ability to sell crude freely with no need for discounts or shady intermediaries. But it wasn't to last. In April 2024, the Biden administration decided to let GL 44 expire and reimpose oil sanctions under its ludicrous freedom and democracy discourse. The goal was ostensibly to squeeze Venezuela ahead of the presidential elections in July 2024. 4. Challenged sovereignty. U.S. sanctions, especially against the oil industry, have come at specific moments and with regime change as the overt goal. But it's worth taking a step back to look at the big picture, especially since these measures aren't going away. Right now, corporations have to get U.S. Treasury permission before striking deals with Venezuela. Non-U.S. companies are not legally bound to do so, but no major actor wants to risk secondary sanctions. Some will just stay away altogether to avoid trouble. In practice, Washington only greenlights agreements that benefit its hand-picked corporations like Chevron and that limit the benefits for Venezuela as much as possible. For example, allowing firms to receive crude cargoes in exchange for debt relief, or allowing the swapping of crude directly for diluents or fuel with PDVSA receiving no cash. A recent natural gas deal with Trinidad and Tobago and Shell might have set a precedent. Though the project is to extract gas located in Venezuelan waters, PDVSA does not hold a stake, and Venezuela will only receive taxes and royalties. It's better than nothing, but without sanctions, there's no reason whatsoever for PDVSA not to participate in the joint venture. In summary, Venezuela is now forced to negotiate with foreign partners in much worse conditions. The Maduro government is still responsible for its decisions, but often the choice is between a bad deal or no deal. Sanctions are meant to hurt Venezuela's sovereignty. Can Venezuela's oil industry build enough self-reliance? Will international allies stand up to US threats? Will alternative, de-dollarized markets emerge soon enough? Maybe in the future, sanctions will become an irrelevant weapon of a decadent empire. But for now, they still mean terrible hardships for the Venezuelan people. And that is the crude reality.